last time that we were at an all-time high. This is the sector which is really not, which is why, you perhaps do not feel like this is an all-time high, because so many of these stocks from the broader market are still sitting at 52-week lows. Nevertheless, today is a good day for our own markets. The Asian markets especially, are under pressure today. So in that context, our markets really sort of, shining. The Taiwanese index down 1.5%, Hang Seng also similar levels. And this is just a few of the markets, but across the board, you're seeing cuts come through. What's doing especially well today is the auto pack. So a few of those names will be up, and the entire energy space is buzzing because of what's going on with crude. Reliance is also, of course, one of the top gainers. On the downside, it is a lot of the metal names which have found themselves there today. So that is something that we are tracking as well. That's the market action. We're going to come back to this. But first up, let's kickstart the show by focusing on a CNBC TV18 exclusive. The IRDAI chairman, that's Debasish Panda, spoke to us on a whole host of issues like approval to new insurers, composite licenses, removal of preference in reinsurance, and also lower capital. So Yash Jain joins us now with all of the key takeaways from that conversation. Yash?
Well, that's correct, Pavitra. So, of course, insurance sector is one sector which has been in the middle of many regulatory reforms. I, over the weekend, had a long chat with the IRDAI chairman. And in that about 30 minutes of chat, I have managed to put together some of the key highlights in terms of headlines, which I'm going to talk about in the next minute and a half to give a overview of what has transpired in the sector. As far as the first thing is concerned, and that's the vision itself, the insurance regulatory body chairman has said that they wish to double insurance penetration in the next 5 to 7 years. Penetration is nothing but the total premium collected versus GDP. If the plan is to increase and double the insurance penetration, which means the premium collected also has a vision of doubling itself, which is positive for all life and general insurance companies. In terms of specific regulatory changes, IRDAI has reduced the solvency requirement in the ULIP segment for life insurance companies. They expect that this will free up about 2,000 crore for the sector. Also, the solvency requirement has been reduced in the crop insurance segment, which is expected to free up about 1,500 crore for the general insurance sector. What has been a very important proposal from the regulator is the expenses of management and commission. Now, here the regulator chairman has said that there's a final consultation paper which is in the public domain, and he believes that this should satisfy all stakeholders in terms of having a common consensus. This is specifically positive for an aggregator like PB Fintech. Importantly, on specific company, IRDAI chairman said that Credit Access India is expected to bring its capital for starting an insurance venture in the next 15 days. By the next board meeting, they'll have all the approvals in place and they can start their insurance business. Also, going forward, chairman said that there is a possibility that life insurance companies might be allowed in the health insurance segment, in the indemnity health insurance segment. This is positive for a lot of life insurance companies like HDFC Life, ICICI Pru Life, SBI Life, LIC, Max Life Insurance. Also, on the composite license issue, composite license is something which allows general insurance companies to enter into the business of life insurance and vice versa. Here, regulatory board chairman said that recommendations from IRDAI have gone to the government. Now it's up to the government how soon they can approve it or the manner in which they can look at it. So that will be an important game changer as far as the insurance sector is concerned. Finally, the last point, a negative of one of the listed companies, the reinsurance company GICRE. That's because IRDAI said that their appointed committee has recommended removal of the obligatory premium. This could have a negative impact of about 2,000 crore on GICRE.
All right, thanks so